cataclysmic demise of not one but two financial institutions, Silicon Valley Bank and Signature Bank, pretty much universally accepted as the results, at least indirectly, of higher interest rates. So why is that? Because the value of treasuries and other bonds has been in descent. Historically, those have been considered safe places to put your fiat currency. So now what?
Banking problems, if left unaddressed, can undermine confidence in healthy banks. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe.
Fed Chair Jerome Powell claiming there's not broad weakness in our banking system, despite Wednesday's more conservative interest rate hike of 25 basis points.
My colleagues and I understand the hardship that high inflation is causing.
Oakland University economist Dr. Michael Greiner and I have spoken about rate hikes pretty frequently over the last year, as the Fed has grappled with decades-high inflation, still outside of acceptable levels, but decreasing. This time, though, the stakes are higher. If depositors decide they want to withdraw from banks, we could see contagion spread across our banking industry and a financial collapse not seen since 2008 or possibly worse.
Yeah, and that's exactly what the Treasury Department and the Fed are all very concerned about right now. And it's why, for example, Janet Yellen stepped up and said that they were going to guarantee all deposits at the mid-sized banks because of the fact that they don't want people to feel that they need to pull out their money.
The U.S. now faced with the second largest bank failure in U.S. history, which has shaken confidence. Only 10% of adult Americans say they have high levels of confidence in the nation's banking institutions.
Most people have their assets consolidated in a relatively small number of banks now. And the banks that are having problems right now are really these mid-sized banks. Like, for example, Silicon Valley Bank. Yes, they've got over $200 billion in assets, but they're only the 16th largest bank in the country.
And Powell also signaled that banks could do some of the work of fighting inflation by pulling back on lending in the coming months, which could actually slow the economy. The Fed predicting that the unemployment rate, which is about at 3.6%, will be at 4.5% by the end of the year. Hillary Golston, Fox 2 News.